Now, to unpack this for us, we are now joined by Professor Andre Roux, who is an economist at the University of Stellenbosch Business School, and he joins us via our Zoom line to discuss the interest rates decision. Professor, thank you so much for joining us here on the late edition. You know, looking at the repo rate today, the announcement, it remains unchanged. Would you say that this is somewhat of a relief for consumers?
Good evening, and good evening to all your listeners and viewers. Somewhat, yes, but only very marginally. It's almost psychologically, more psychological than practical. I mean, obviously, in the lead up to the decision, it was going to be a toss-up between either a 25 basis point increase or no increase. There was no prospect at all of any decline. So it's, I suppose, a lesser of two evils for beleaguered consumers.
And what would you say informed this decision? We have heard from the Reserve Bank governor saying that the likes of lesser load shedding played a role. We also saw there him saying that, you know, the petrol price dropping was also somewhat of an influence. So what would you say were the contributing factors that led to this decision?
Yes, I think certainly the good news we got yesterday with the latest inflation rate coming out at 5.4% was a pleasant surprise. And it'll probably drop a bit lower in the next couple of months, merely because of the so-called base factor being so high a year ago. But one swallow doesn't make a summer, which is why he was also very careful in pointing out in different ways that he's not yet guaranteeing that this is the end of any increases. As you quite rightly point out, the risks on the upside are there, ranging from food prices, naturally, a potential drier conditions here, as well as the earlier announcement this week by Russia that they're going to kind of block exports of grain by the Black Sea. That could put upward pressure on grain prices, amongst other things. Obviously, electricity prices still rising, etc. So he's being very careful. He also pointed out that wage increases probably lie ahead, which might not match productivity. So he's being very careful, hedging his bets, not stating categorically this is the end of any increases, but for the time being, a holding exercise.
And what would ask, you know, are we beginning to see, you know, the interest rates in this country stabilize? I mean, we have seen, you know, the interest rates rise, you know, over like a 10 consecutive times in this country. Would you say that we are beginning to see things stabilize, or maybe it's still a bit too early to say?
It might be a bit early, but I think we are certainly approaching, we haven't yet approached the end of the upward cycle, to put it rather diplomatically. I don't think any major surprises, increases await us. The consensus view now would be, given our current information and knowledge, that rates will probably remain where they are for quite some time, probably only showing signs of declining into next year, perhaps towards the middle of next year. Because you must bear in mind, although inflation seems to be coming down, fundamentally, the governor wants to bring inflation down to 4.5%, the midway range between the two targets, two ranges. Also bear in mind, as he pointed out, that elsewhere in the world, interest rates might still increase. So the problem is, if elsewhere in the world, say the USA, rates are still rising and they're not rising here, that, unfortunately, puts pressure on the rand-dollar exchange rate. The rand might weaken ever so slightly. So, as I say, it's a bit early to say, but let's hold thumbs and hope that in the absence of any untoward, unexpected events, we're at least reaching the plateau.
And, you know, looking at the announcement which came in today by the Reserve Bank governor, you know, what does this mean for those consumers who are in debt?
Well, it means, I'm afraid, that not much has changed. Thankfully, it hasn't got worse, but it does mean that consumers are allocating a good portion of their income just to pay interest on their outstanding debt, which means that it does chop off a bit of their ability to buy consumer goods, both crucial needs and wants, which for the economy means a relative slowdown in consumer spending, or not such a big increase in consumer spending, which means that economic growth will continue to remain sluggish. I think it's also worthwhile pointing out that he did, in his last paragraph, make a very important observation, very tactfully, But essentially, I'll just read one or two of the words. He says that the committee has recommended for some time additional and indirect means of lowering inflation within the reach of the public sector, including achieving a prudent public debt level, increasing energy supply, moderating price increase, and keeping wage growth in line with productivity. He's essentially saying, very carefully, that a big part of our inflation hasn't got much to do with monetary variables, but rather things such as public wages and productivity and the like. He's essentially saying the Reserve Bank cannot be held responsible for all the inflation. They can only make a certain contribution. It's up to other players in the economy to help us bring down the inflation rate.
And Professor, when it comes to, giving South Africans advice in terms of, when we continue to see a high cost of living in this country, a number of consumers are in debt, what advice do you have for South Africans during this time?
Yeah, well, I suppose the classic advice would be try not to borrow money to finance current spending, cut back on non-essentials until the worst is over, and then, as I say, do not indulge in spending on luxury goods if you can't afford it.
And, just before we wrap up this discussion, you've just mentioned it slightly during our discussion now. When can consumers see a relief in the repo rates?
Well, I think given, as I say, our current knowledge and information and conjecture about where the economy is going, I think not much before the second quarter of next year. As I said earlier, although inflation is down to 5.4%, it's very volatile. And in any case, he would like to see it more firmly entrenched at below 5%, closer to 4.5%, before really relaxing monetary policy.